Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, we have Caleb Silver back with us. He's the editor-in-chief over at Investopedia, and we're going to take a look at Investopedia's top 10 terms of the year. Guess what? Jay-Z makes the list. This is pretty amazing to see Jay-Z
Hova makes the list.
There you go. All right, tell us about how this list was compiled, and then we'll get into the top 10 terms.
So we're Investopedia. We have a lot of visitors to our site, about 22 million a month, and our data sciences team looks through search trends month by month to see what trends are outliers, which ones are spiking more in terms of reader interest, more than they normally would on a month-by-month basis, and by that we determine the terms of the year.
All right, that's amazing. Let's pull up this list here and run through each of them. We'll start off with negative interest rates, not too much of a surprise.
No, not at all, and negative interest rates has become a global theme right now. There are developed economies, we're talking about Sweden, Japan, Denmark, that have negative interest rates on their treasuries, and that people are willing to not earn a yield by loaning that government money, and it's a phenomenon that's happening around the world in major economies. It's very unusual.
All right, dark web.
Dark web, this is where the part of the web where it is not indexed, you cannot Google it, and what the unfortunate part about dark web is that there have been a lot of data hacks in 2019. There's a lot of data hacks every year, but 2019 had a lot of extreme ones. There was a big one in India recently where 1.5 million bank customers had their information stolen. A lot of that wound up on the dark web, but we've had other data breaches. We've had them at Sprint. Fortnite had a data breach. Disney Plus, when they launched, had a data breach. So a lot of the people's personal information sometimes winds up on the dark web, and our readers were trying to find out what exactly is the dark web.
All right, and we've spoken about fire before. This is a little bit of a hot topic for myself. It's kind of hard to wrap your head around, but seems to be that it's big with the younger investors.
Right, so the financially independent retire early movement was literally on fire in 2017 and 18. There were a lot of books about it. Even today, you can't go to financial websites and not see articles about how this 33-year-old retired with $500,000 and will never work again. That's a little bit of an extreme on the FIRE movement, but the FIRE movement is real because people, especially younger people, are questioning the value of a career, putting 10, 20, 30 years into a company and being able to retire on a pension. That's gone in a lot of ways, but the idea of being able to make the amount of money you need and live off of that for a long time is very real in people's eyes, although it's a lot more difficult than people think.
Especially because you're living longer, too.
Yeah, we're living longer, and we have to work harder.
All right, 4 and 5 kind of go hand in hand along with number 1, conventional mortgage and negative bond yield.
Right, so the conventional mortgage came up because mortgage rates have been steadily falling for months as the Federal Reserve has reduced interest rates. Mortgage rates right now are extremely low by historical standards. Talk to anybody that was buying a house in the 70s and 80s, and they cannot believe you can get a mortgage now for around 4.5%. So at the same time, people are questioning whether it's important, whether they need to have a 30-year mortgage, so that mortgage drumbeat kept going on this year as people were questioning the value of a mortgage, and especially younger people are wondering, is it smarter for me to buy or rent going forward? Negative bond yield goes hand in hand with negative interest rates. We have bonds, not just corporate bonds, government bonds with negative yields, where investors are willing to accept no yield for a safe place to stash their money, and that is a prevalent theme, obviously, in 1 and 5.
All right, now exempt employees, is that because we're more in a gig economy now?
Yeah, the gig economy is really what gave birth to the exempt employee interest as far as our readers go, but you can look at what happened in California with Assembly Bill 5, right, where they were determining whether Uber drivers were freelance employees or whether they were employees that were entitled to benefits. California passed Assembly Bill 5. If we see that type of movement happening around the country, then people that are in the gig economy or working on a contract basis, but for companies on a consistent basis, may wonder if they're actually exempt employees or if they're employees that are due benefits like health care and other.
All right, now take a look at Jay-Z. In a way, it's not too much of a surprise. He's a very well-known entrepreneur, and whether you like his music or not, he's done amazingly well for himself.
Well, I'm a huge fan of his
music.
So am I. A huge fan of his music, but he is an incredible entrepreneur. So he's been an entrepreneur for many, many years. He didn't drop an album in 2019, which is remarkable, but Rock Nation, his company, which promotes other artists, it's got a sports booking agency, an agency in it, has done very well. And also he launched Marcy Venture Partners in 2018 and started putting some of that money to work as an entrepreneur, as a venture capitalist in 2019. Plus he did a big deal with the NFL where he's helping with the halftime shows right now. Mm-hmm. So it was a big year in business for Jay-Z, the Jigga Man.
All right, Karl Marx, you know what, it's not too unusual to see that considering where we are in the election cycle.
Yes, everybody's talking about socialism, especially as a lot of the Democratic candidates are putting forward economic policies that have a few hints of socialism in there. We're talking about universal basic income, not socialist, but along those lines, Medicare for all. Karl Marx, the beard never went out of style if you walk around any big city right now, but he's big because people are wondering, what did he actually mean when he was talking about capitalism and he was talking about socialism? So he had a very big year on Investopedia.
All right, interesting. Inverted yield curve. Have not heard that in quite a few weeks. I mean, I guess that recession indicator didn't play out.
Right, in a few months for sure. So the inverted yield curve, usually the canary in the coal mine for recessions, when we're talking about the 10-year yield and the 2-year yield in U.S. Treasuries inverting. It didn't happen. What happened was the 10-year and the 3-month, the super short-term yield inverted, and people thought that might be a harbinger of a recession, though the economy seems to have improved and gotten a little bit on firmer ground since then, but inverted yield curve was hot to trot during the summer months when we had a few of those inversions and people thought a recession was coming a lot sooner.
All right, and to wrap up here with ESG, and I have to tell you, 20 to 30% of my coverage every week, ESG finds its way in there.
Yeah, we're happy to see that, and this is a repeat from last year. So that's environmental, social, and governance. This is a way of evaluating companies you invest in or funds to see if they have those environmental, social, and governance characteristics. People are right now investing more with their hearts, and they want to invest in companies that they believe in that are doing the right thing when it comes to protecting the environment, social ideas, and governance in terms of corporate governance. We'd like to see that, and we'd like to see that rise even higher because we think it's important, and it's good to see that back on the list for 2019.
All right, well, we'll see where we are in 2020. Thank you so much, as always, for joining us at
Thank you.
MarketSite. And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.